You're listening to The Real Well Show with Kathy Fettke, the real estate investor's resource.
Hi, I'm Kathy Fettke, and welcome to The Real Well Show. When Rich and I started buying properties, rental properties out of state, we started with Dallas, Texas. And the reason for that is because it was so business friendly. And by business friendly, I mean they were giving tax incentives and making it really attractive for businesses to move to Dallas. And when businesses move, so do people, because they're moving for the jobs. So we started investing again back in 2004 in Dallas, Texas. And today we're seeing some of the same trends. I mean, if there was ever a time that we could see which states were more business friendly than others, it was 2020, because some states shut down completely and mandated it, like here in California where I live. In fact, if a business tried to stay open in LA, the city would literally just shut down the electricity and water so that that business could not work. And many restaurants were afraid to lose their business license. And so it was really, they just literally could not work, not very business friendly. Whereas across the country in Florida, of course, we had a very different situation. And here we are a year later. We know that Florida was very, very business friendly all throughout the pandemic. And how did that work out? Well, I'm going to read to you a little bit of the Sovereign Man blog that just came out, and it's very interesting. The CDC statistics show that the COVID-19 case rates and death rates since the beginning of the pandemic are nearly identical in both states. And on a side, Florida's death rate is 40% lower than in the state of New York, along with dozens of other states. And that's interesting because Florida has its share of older people, right? So how is this possible? Well, we know that Florida didn't shut down, yet it's got about the same statistics as California that did. Here is what was affected by those shutdowns. And of course, it's the economy. So in January of 2020, California's unemployment rate was at 3.9%. Today, it is 9.3%. And in January of 2020, last year, Florida's unemployment rate was 3.3%. Today, it's 5.1%. The national average unemployment is 6.7, and Florida's labor market is much healthier than the national average. Leisure and hospitality jobs fell by 30% in California, only 15% in Florida. And twice as many people have started businesses in Florida compared to California in the past year. So comparing the third quarter of 2019 to 2020, California's economic decline was 33% worse than Florida's, according to the Bureau of Economic Analysis. So I'm not going to pretend like I know anything about viruses, except that I try to avoid them. But what we do look for as real estate investors, it's very important for us to look for areas where our business is welcome, and our business is real estate. And we are seeing that Florida is very, very friendly to our business. So on today's show, I wanted to bring someone who actually is from New Jersey, but did a lot of flipping houses in California, and then took his winnings and went to Florida and invested there. So he kind of knows a lot of different markets, you know, the high-priced, high-tax market of New Jersey, high-price, high-tax market of California, and the low-tax, low-price market of Florida. But of course, things are changing quickly there. So we're going to get boots on the street information. Brian, welcome. So happy to have you here back on The Real Well Show.
Hey, Kathy, thank you so much for having me.
I love having you on because you're an old timer now, right? You don't look like one, but you've been investing for a while and through many different cycles, lots of ups and downs. I'm just curious, before we go into your story, where you think we are in the cycle right now in Florida, where you're currently located and investing?
It's a great question. So I have gotten unemotional about this whole real estate investment game in the last 25 years, as you said, of going in the ups and downs. And I really just pay attention to the numbers, which I have some numbers to share with you, because at the end of the day, I think, you know, when our emotion goes up, our intellect goes down and we make poor decisions. So I will say that I do and did believe, I did believe that, you know, we were getting close to the peak in the last 12 months, let's say. But then I look at the numbers and I look at the supply and demand, and I look at the rents increasing and the cash on cash returns. And the what's happening in the marketplace proves me wrong. So, as an example, let's look at Duval County, which is the city of Jacksonville. It's actually the largest city in North America. It's where we're headquartered. It's where I'm the most heavily invested personally as a landlord. And I just got these numbers from my builder partner. So coming from the Builders Association, which is regulated by Northeast Florida Association of Realtors, startups or permit data for we go back to 2005, which is when everyone feels like we were at the height of the last cycle, right? And the history shows that, and the numbers show it. We had in Duval County, we had 8,360 new permits pulled in 2005, which again was the height of the market. In 2020, last year, we had a little over 5,400, so almost a third less. Now, that in itself tells a story, right? We're not at the peak if you look at the numbers. But then to compound that, I look at population, because at the end of the day, you need people moving in along with the housing market and to support the local economy. So today we are at, depends on the resource that you look at, Kathy, but today I just looked, did some of my research to prepare for this interview with you. Population greater metro of Jacksonville is 1.6 million today. It has grown every year consistently with compounding growth about 1.5 points since 2005. So I guess in a nutshell, what I'm saying is I don't think we're at the top, because the numbers tell me we're not, right? The permits for new construction, and then the compounding growth of people moving in. I always go back to the fundamentals. I was very, very fortunate, 25 years ago, to get some really smart people around me, people like Craig Chandler, my friend from Australia, who's probably one of the most successful real estate guys that I know, and that's been doing it. I've been doing it 25 years. He's been doing it about 35 years. So I've really listened to his expertise. And I go back to the fundamentals of, jobs and people moving in, affordability. I looked at the median this morning in Jacksonville. It's $225K. It's still very.
That's pretty affordable. So
that's what you pay for a septic tank in California.
Oh, I think we paid a little more. No. We just had one replaced, and ouch. Because then you got to do all this other stuff with the septic, like, make sure the oak tree's okay. But
that was an inside joke, as you and I talked about.
Oh, okay. So you're from New Jersey, but you did your first investing, or you spent a lot of time in Bakersfield, California. So the California market, and then you sold those properties at the peak and went to Florida. So different markets. Now in California, I'm born and raised here. I just can't go anywhere else. This is my home. I love it here. Even as crazy as it gets, I think we're here forever. But what we've been saying since I was a child back in the 70s, when houses in the San Francisco Bay Area where we lived were $50,000, then they went up to $70,000. And I remember my dad kind of freaking out. And then he paid $100,000 for the home we bought. No, I actually think it was $90,000 for the home when he really moved up into Atherton, the most expensive place in the Bay Area. It was $90,000. 10 years later, when I was graduating, it was worth $1 million. And he thought he had just made it and cashed in. Well, 3 years later, it was worth $4 million. So I'm used to, let me tell you, he went from elated to very depressed. I've never seen anyone so depressed. He would walk around with his head down because he lost $3 million if he just held the house. Now, in California, we're always saying, we've peaked. We're at the top. It can't go more than 90,000. It can't more 200,000. Oh, $1 million, $4 million. I mean, it just keeps going. So Florida hasn't had that happen, but it's starting to experience that kind of growth along with a lot of other markets. But when you really pull it back, what'd you say, 225,000 is the median home price?
As of 15 minutes ago.
I mean, there's still so much room to grow. When you have people like me from California moving to places like Florida, or people moving from New Jersey and New York to Florida, $225,000 is like you said, it's like buying a car for them. It's probably less than the payment they make on their car. Definitely cheaper than their rent in New York. So let's talk about that. Are you seeing a lot of people moving? Like, who's moving there? Are they from New Jersey, New York?
Yeah,
Where are they coming from?
Yeah, great question. So on a day-to-day experience with my conversations with people I'm dealing with, whether it's family, friends, business associates, they're coming from all over now. But pre-COVID, I would say we had a mass exodus out of New York and what I call the tri-state area, which is New York, New Jersey, Connecticut, where I grew up. And it's always been that way. People get sick of the cold and the crowded and the taxes and the blah, blah, blah cost of living in Northeast Florida. And I'm sorry, in the Northeast, like in the tri-state area, and they end up moving south down the coast. And 9 times out of 10, it seems like they land in Florida, right? My parents are a perfect example of that. I'm a perfect example of that. All of my friends here that I surf with and that I play with are examples of that. So that was happening. That was happening before COVID, Kathy, but now it's just compounded, and the growth. Like I talk to people, we interview. Obviously, the 2,000 doors that we manage at the property management. We're interviewing them and taking applications and seeing they're relocating from not just the Northeast. They're really relocating from all over the world. To be honest with you, I think for the listeners, one thing to really pay attention to when you're thinking about real estate investments is what is the local climate, right? So as you said, I had a pretty good run in California. I got very exposed to landlord-friendly laws and regulations in Bakersfield, California. When I look at that and compare it and contrast it to where we are in the entire state of Florida, because the entire state of Florida is very business and landlord-friendly, that number one attracts people like us that are real estate investors full time, but more importantly, it attracts employers and big major.
Did you mean tenant friendly when you were talking about Bakersfield?
Yeah, tenant. Did I say?
You said landlord friendly, and I was like, really? They have landlord friendly laws in Bakersfield? No, tenant friendly, right? So the law supports the tenant more than the landlord in California.
Yeah, to give you a tangible example, the tenant stops paying me in Bakersfield. I go to court 9 months in, 12 months in many cases, and the judge said, you know what, give them a couple more months. They're having a hard time. And I'm thinking, well, my mortgage was due 12 months ago. Are you gonna help me with that? In the state of Florida, it's complete opposite of that. It really is like apples and watermelons when you look at the business environment, the landlord-friendly environment. So sorry, I misspoke. Yeah, I meant to say tenant-friendly in California versus landlord-friendly here. And that one little simple fundamental changes so much, right? I mean, COVID is an example.
Well, let's just, look at the past year and the way California handled the pandemic, the way Florida handled the pandemic. Florida was getting a lot of criticism, still is, with Miami, the spring break again. Here we are a year later, and Miami's in trouble for its spring breaks again. But people are still going there. California, of course, completely shut down. We're still pretty much shut down. We can't go indoor dining for the most part. Hopefully that will change. But Florida was getting so much criticism. And yet you guys have, I don't want to talk about viruses and things I don't understand, but what I'm hearing is statistically, it's not that different between being open, you guys being open and us being shut down. Am I correct in that?
If you look at the numbers and you're unemotional about it, I think you're spot on there, right? And so I always do go to the data, and yeah, it shows that, and again, I don't read too much into, the diseases and all the back, because every time you read something, it's a different thing. Mm-hmm. At the end of the day, the quality of life that we have here in Florida, and again, I'm coming from California and I'm coming from New York. I've lived in those places in different environments. It's a business-friendly environment, and I don't feel that we've, experienced COVID more than any other state in a radical way. But there's so much data out there, it could be overwhelming.
Yeah, it's hard to understand. But from your perspective, it's been open, right? Most businesses have been open. Is that right? Were your schools open?
Yeah. Yes. Yeah. My kids are at school right now. They're wearing a mask, but they're at school. I would say that last March and April, I was scared, nervous, probably like the rest of the world, right? Because there was just, I don't know, it was chaos, right? We knew that there was this crazy global pandemic that was about to strike, but no one really had any information. And
all we saw was body bags on TV. Yeah, it was terrifying.
Yeah, exactly. You hear the hospitals are shutting down, and there's bodies everywhere. I mean, look, at the end of the day, the media is going to sell sensationalism. I mean, I know you come from a background of, media in your previous career. All I do is look at the numbers. I get the data from my management teams, from our sales teams. The numbers don't lie. Again, going back to like the fundamentals and what my mentors told me 25 years ago, Brian, the numbers don't lie. The numbers don't lie. A house is worth what it'll rent for. Like, I always go back to those real simple but really wisdom-filled like one-liners that sort of drive through, especially when you have a global pandemic crisis. Like, at the end of the day, our rental numbers are up, our sales numbers are up, jobs are, people are coming to the state to live, to work, to invest. So I wish it's just that simple. I don't, I'm not a,
Yeah, we don't have to try to figure out all the unknowns in the world and all the confusion, but numbers sure make things easier. They don't lie generally. So what you're seeing, and we just had this discussion yesterday. We brought all of the Real Wealth preferred teams together on a call, and we were asking, oh my gosh, rates are going up and prices are going up. So our cash flow is going down. I mean, is it no longer a good deal? And, and I was so shocked again at your response. I was shocked last year when, we had eviction moratoriums and foreclosure moratoriums. And I thought, oh boy, we're not going to be able to get out of this. We've got thousands of people in Real Wealth Network who own lots of properties and they're not going to get their rent. And how are they going to survive? And then, we had you come on and like, oh, no, people are not only paying their rent, we've got more applications than ever. So I was shocked at that. And now I call you again, at all the teams and say, what are we going to do? Prices are going up, rates are going up, cash flows must be going down. And you guys had a different opinion again.
Yeah, again, just look at the numbers. We do like side-by-side analysis as investors, and you are 100% correct. There is what's perceived as a crisis to the builders if you're in new construction, because the cost of materials, specifically lumber, has gone 250% in the last 12 months up. So you could imagine what that would do to pro formas for the builders, which we are. That's the main product that we're selling. But when we look at side-by-side analysis, is at the end of the day, rents. I go back to a home is worth what it'll rent, right? So when we look at those side-by-side analyses, with the increases in sales prices and the increases depending on when we sold the asset in interest rates, fortunately, we've had rents appreciate as well. So I think one of the big lessons in this whole thing for me personally is, I wear a sales hat in our business, so I'm always really paying close attention to the numbers and analyzing. We were real conservative because in some of these markets, we went in and we were the guinea pig, right? We were going in and buying a lot of land and building these houses and projecting these rents that we thought were realistic. We were actually conservative. So say we projected rent to be $1,500 on a 3-bedroom, 2-bath in, say, Cape Coral, Florida. When it rented for $1,650, and that $150, $200 swing makes up the difference when you have an increase in price points and interest rates. So I think the lesson for me is always try to underpromise and overdeliver, and be conservative with your numbers. But that little thing right there is what's been monumental for us, in that a side-by-side analysis of what we were selling 12, 18 months ago is performing cash on cash wise identically to what it is today, even with the growth and with the change in the interest rate environment. And at the end of the day, Kathy, I mean, I know you've been doing this a long time. We're spoiled rotten with interest rates right now. People are freaking out. People are freaking out because we've gone into the 4% range. I'm thinking, I've been doing this for 25 years. I would be, sign me up for everything at 4%, right? That makes flow sense. So I think we got a little spoiled with an interest rate environment, and now we are going to move into inflation, I think, in a slower way. The good news is, if you look at U.S. real estate history and track the numbers, rents and values are always indexed to inflation, and I think we are going to move into an inflationary time, and that's good news for us landlords, because we're locked in at the dollar.
Yeah. So what you're seeing is that even though prices are going up and interest rates are going up, rents have been too. So the cash flows aren't that different, maybe down a little.
Maybe $50 on some of our pro formas. I mean, I thought I was maybe living in a bubble over here, but we got on the phone, as you said yesterday, with all the other providers around the country and different economies and different product, and they're saying the same thing. Yeah, their side-by-side analysis is not radically different. So I think when you're conservative with your numbers, that's what happens.
Yeah, and none of this we wouldn't be having this conversation if we didn't have such a manipulated environment. When you have $5 trillion, that's a number that we throw around, but we really don't understand how massive that is. But when that much money is thrown into the pot, that's money that circulates, and it ends up typically, at least historically, in assets that inflate, like real estate and stocks. So without all that money infusion, we would be having probably a very different conversation. But that's the reality of it. And with that much infusion of cash from the Federal Reserve, you're going to see inflation. They want inflation. They're trying to create it. So we gotta play their game. And like you said, 4.5%. I mean, when I started investing, we were at 8%. When my dad was investing, it was like 12%. I remember when he refied and went down to 9, and he was just beside himself with joy. So I mean, we are at a still very good time. But you have to pick your market. Well, I don't even know if you have to pick your market anymore. I was going to say, it just seems like it's across the board, the same kind of issues, but specifically in the areas where so many people are going and moving to, you've got outside money coming in, and so you almost can't even look at jobs anymore. We used to look at local employment and say, we've got to know what the local wages are in order to understand the affordability of this particular property. Well, now you might have someone with a New York City salary moving in that just thinks everything you've got is cheap.
The landscape is changing, Kathy. I mean, you just hit the nail on the head. People working virtually, making a New York wage and living in Jacksonville, Florida, where the median price is $225. I mean, I grew up in New Jersey. Like, to your point about your father, I mean, I talked with my dad about like cycles, and bought his first house for $22K, and that same house in New Jersey is now worth, a couple $1 million. And that's just the reality of it. I mean, we're in a very interesting time right now, but at the end of the day, if you go back to the fundamentals and pay attention to jobs and are people moving in, is it affordable? What's the supply and demand? Yeah, I mean, all things are good right now. Nothing makes me, nervous.
That's a great. Well, then I'll ask you one more thing. I know you get this question all the time, but there's obviously more and more concern about climate change. And even if Florida is such a sexy place to move with the sunshine and the beaches, and even if you live inland, away from the hurricanes, you're not that far away from the beach, really. It's like, you could be inland and still be an hour from the beach. So, but, what are your thoughts on that? If someone's investing for the long term, and, is there going to be a Florida in 10 or 20 years? I mean, what do you say to people?
Yeah, I mean, I think that the overall answer is yes. I mean, it's the old put your money where your mouth is. So my wife and I are building our personal portfolio as we speak. And I think that always gives our investors a peace of mind. It's like, well, what are you doing with your money? Well, I'm putting it in the projects I'm selling to you guys,
Well, you're actually doing it even riskier because you're buying waterfront. I mean, you're like right at the beach.
Yeah. So to get back to your question, yes, we do take some risk there in our personal portfolio and some vacation rental stuff. But my core business and what we provide for Real Wealth members is the way I mitigate that is do not build in flood zones. So none of the new construction build to rent properties that we talk about to your clients are in a flood zone. I don't, unless it's an Airbnb property that's on the beach, obviously, then they're insured for that and they go into it knowing that. But the premium for rent that you get there offsets some of those insurance and risk costs. So it really comes down to risk and reward, and every investor has different needs and wants around that, as because you have tens and thousands of investors. So we just try to mitigate risk and really have good solid management in place. I mean, that is the backbone of any investment in good, bad, or indifferent times. If you don't have management in place, then good luck. And I've been through that, and we're not perfect with our management now. We have growing pains, but we have good resources in place, and I think that's really important for any investor. I don't care if you're investing in Malibu or Florida or Africa or Europe, those fundamentals are so important.
Well, you have done a webinar for Real Wealth, and And that's kind of going over the ins and outs of the property management and where these properties are located and how they're built and how long it takes. All the details are on that webinar. So if anybody wants to see that, they can go to realwealthshow.com and click on the Invest tab. I think you have to join first, but you'll drop down to, I think all of yours is under the Jacksonville tab. Is that right? Yeah, even though you're building properties all over Florida, but to find you have to click on that Jacksonville tab and you'll see, get that webinar, because that's pretty thorough and it's going to be able to answer a lot more questions than I can ask today. So it's, as usual, so great to see you here on the Real Wealth Show. I'd rather see you in person in Florida. So we're getting to a point where maybe that's possible and we could go surfing. Let's do it. And I can't wait to meet that little munchkin of yours. Oh, my little grand boy. Oh, he's the cutest thing. Ah, all right. Well, so good to see you. Hope to see you soon. And thanks again for all you're doing for our members at Real Wealth, somehow finding them inventory in an inventory starved market. Okay, Kathy. Thanks so much. Thanks to the listeners. And thank you for joining me here on the Real Wealth Show. If you'd like to get in touch with Brian and find out about some of the new homes that he is building for investment purposes, just really building for rentals and selling them to investors, you can get all his information on our website at realwealthshow.com. Just click on the Invest tab and you'll see Jacksonville as one of the areas. Now, like I said, he's in lots of other parts of Florida, but that's really where he lives and is focused for the last 10 years, but he's building in Ocala and, like he said, kind of all over the state. So you can get his information and find out more about those homes and his property management company at realwealthshow.com under the Invest tab. If you want to hear the webinar that he just did, same thing, but you go to the Learn tab and look for webinars, archived webinars. All right, have a wonderful rest of your day. We'll see you next time. Bye-bye.
The views and opinions expressed in this podcast are provided for informational purposes only and should not be construed as an offer to buy or sell any securities or to make or consider any investment or course of action. For more information, go to realwealthshow.com.